Hey guys, welcome to the Global Desis channel. I've been living in Australia for about 6 years now, and I've actually seen the cost of living creeping up year on year for past few years. But in these times, I've come up with certain tricks to save money on my living expenses, and I thought to share those tricks with you today. So here are my 5 ways I go about saving money in Australia. Stick to the video till the end for this website that I want to share, which can be a big asset in your journey to personal finance. Let's begin. Number one, grocery. If you're living in Australia, then I'm pretty sure you have heard of the big retail chains like Coles and Woolworths. These two companies hold about 67% market share in their respective areas in Australia. There is a likelihood that there is either a Coles or a Woolworths nearby, and in some instances, both of them close to each other, which is kind of like a case for me. But do you know about the loyalty reward points that these companies have? I was surprised when I was talking to my friends last week, and some of them were not subscribed to either one of these, not even the free ones. So, Coles has something called a flybuys reward system, and Woolworths has something similar called everyday rewards. Now, each of them give you certain amount of points every time you spend in their stores, and they even sometimes have special deals going on for their customers. Kohl's often comes out with these deals where if you spend $50 for 4 weeks straight at Kohl's, then at the end of that, you would get $50 discount on your next shopping. So that's like spending $200 and getting a $50 benefit. Now, obviously, the amount needs to be higher than 50, so you have to be smart about how you split your grocery shopping. But this is something that I've exploited a number of times, saving me about hundreds of dollars while shopping at Kohl's. At the same time, Woolies has something similar, where it has boosted points and special offers regularly at their stores for anyone who has Everyday's Reward membership. 2,000 points in either one of these loyalty programs are equivalent to $10, which is like a passive way of saving money the more you shop. Now you have to be smart here. More you shop can be a problem because you might end up spending much more than you need to. So as long as you have control over your spending at these stores, these can be a really good way of saving money, as long as you're spending only on what's necessary. That's just their free loyalty program. I'm also subscribed to each of their paid subscription, which is about $7 per month. And in case of Woolies, it is $70 per year, which I've actually subscribed for. So how that part works is if you have the subscription, you get extra deals, double the points. You also get 10% discount on one shopping trip per month. So I've got that 10% from Kohl's and I got that 10% from Woolies. So if I'm smart about it and I club my shopping trips together, I can have one each of the 2 weeks of the month and then end up saving 10% on my grocery shopping through the month at both the providers. So this is something that not many people are aware of, and that's something that you can potentially go for. It's only $7 per month and the benefit per month is capped at 50. So you can potentially save $43 every month at each of these stores. The link for these subscriptions is in the description. If you're not already enrolled for these, then probably you should go for it. At least the free one, if not the paid one. So other than grocery, the biggest expense that you might end up having are the utilities. That is electricity, water, gas, and internet. Electricity and gas is often clubbed together under one provider, whereas the internet can or cannot be part of that plan. But for water, we don't usually have multiple competing providers. So not as many options there, but water is reasonably priced depending on your location anyhow. So let's talk about electricity, gas, and internet. The best thing about the Australian markets is there's a lot of competition among the big providers. So they often come up with deals where they provide you special benefits if you're switching from their competitor. So what people often do is they shop around and switch their plan every 6 months to 12 months. How that benefits you is you get discounted rates for a certain amount of time. For electricity and gas, I would really recommend you to look up this website called Energy Made Easy, which is a government provided website, which provides a comparison of all the utility providers in your area. This can be a really good place for you to hunt around and check who are the best electricity or gas providers in your area. I will also share a link which provides comparison of different internet providers in your area in the description section. So the thing with internet providers is they also go through the same thing where switching from their competitor to them provides you with discount for a course of 6 months or 12 months. So that can again be something that you can exploit in order to bring down your utility costs. So make sure you check that out before making your next switch for a utility provider in your area. The next big thing is housing. Currently, housing can be one of the biggest costs that you have to go through. When I came to Australia, I was renting for about 6 to 7 months, and I'd initially thought that renting is the way to go. But eventually, I realized that at least for my situation, renting was not viable long term, and getting my own place would be a better way to go about it. That's when I got my first 2-bedroom unit, where I lived for about 4 years before upsizing to my current location. When I actually got my first place, the interest that I paid was about 2%, which is extremely low. But as the cost of living increased, the cash rate started increasing, and the interest rates for these things has tripled, in at least in my case. So then now that I already have a house, we have to figure out ways of saving money using what I have right now. So if you're someone who is a homeowner, then I'm pretty sure you have heard of something called offset account, which is usually clubbed with variable interest rate. So how you can go about saving money here is you can make sure that all your savings are in an offset account. The way an offset account works is any money that you have in this account would not accrue interest. So for example, for a $1 million loan that you have, if you somehow have $100,000 in your offset account, only $900,000 of your total loan amount would actually accrue interest. So that is easily a saving of about $5,000 to $6,000 per year, depending on what your interest rates are. This is something that you should definitely consider because passively you save a lot of money, and it is better than putting it into a regular savings account because any money that you gain through interest is taxed. Whereas obviously, since you're not really earning money in offset accounts, there's no tax that you would have to pay for it. The renters might not have same financial opportunities that I just spoke of, but definitely look for investment opportunities in instruments like ETFs and ensure that there is some kind of investment that you're regularly making, because that interest can really help you to save money for your future home buying prospects. Now, I'm not going to discuss investing in this video, but if you'd like to discuss more about what are the best instruments that you can go for to passively earn money, do let me know in the comments and I can make a video about it in the future. Moving on to the next point, health insurance. Now, when you're living in Australia, you might believe that all your medical expenses are taken care of by Medicare, which is very true. But there is another aspect that you need to think about. So every year you spend about 2% of your earned income for Medicare, which covers all your major medical expense. But there's another small component that people often ignore. That's the Medicare levy surcharge. If you're earning a certain amount of money and you're above a certain age, there is a Medicare levy surcharge that you need to pay. This Medicare levy surcharge depends on your income and is often equal to how much you would have to pay for a private insurance. The way to avoid a Medicare levy surcharge is to have a private insurance with hospital benefits. If you have such an insurance, through a private healthcare provider, you wouldn't have to pay this surcharge. And the amount of money that you end up spending for this insurance is usually close to the surcharge that you have to pay anyhow. So how private health insurance works is you have two components in it. One is a hospital benefit and the other one is the extras. The extras usually have a cool-off period. That is the duration that you have to be subscribed to before you can actually avail the service. This can vary between providers and can often be reduced depending on the ongoing deals these providers have. So what you can actually do depending on your requirement is enroll for these extras for the cooling off period. And after that cooling off period, you can immediately go for your service and then cancel the extras. So for example, in my case, I get myself annually checked for both my eyes and my dental issues. So what I can do is I can take these extra services, wait for the cooling off period, and after the cooling off period, get the service immediately, and then cancel the subscription for rest of the year. Since the insurance runs from January to December, I can plan to have my regular services done mid of the year and then cancel it for rest of the year. That will be 6 months saving. And then at the start of next year, get these services again so that I can again use the cooling off period and then gradually get to my actual service at the end of 6 months. So this pretty much saves me about half the extras cost. I hadn't been doing it for a really long time because I wasn't aware of dealing with it in this manner. But when I did, my monthly insurance cost went down from about $340 to down to about $150, $180. So this is something that you should definitely look into. One, getting yourself a private insurance at a good provider, and then looking into extras depending on your requirement to keep your insurance costs low. Moving on to my next topic, credit cards and gift cards hacking. Credit cards usually have a bad rep across the world, but the reason for that is not a problem with credit cards themselves, but the way people use credit cards. If you pay off your credit card bill on time every time, then credit cards be an amazing tool that you can use for lots of benefits. The rewards program of all these credit cards, as well as the timeline you get after spending money to actually repay this amount of money, can really help in many ways. Especially if you own a house and have got home loans with certain banks, you get special benefits where even the high annual fee credit cards can actually be free as part of your package. Going for such credit cards can be really helpful because one, they have higher benefits and points, and second, that credit card is going to help you keep your offset balances high, which can also help you with the offset hacking that I just spoke about some time back. Not just that, these banks also have options to buy gift card at discounted price, which can also be used amazingly in order to bring down your monthly costs. For example, the bank that I am with right now, I get about 3.5 to 7% discounts on multiple retailers like Woolworths, EB Games, JB Hi-Fi. So what I can do is when I'm purchasing from these places, I can actually use my money from offset account in order to pay for the discounted gift cards. And usually the discounts are higher than the money that I would save by keeping that money in the offset. Or in case I don't have such offers available, I can use my credit cards to pay for it, provided either the credit card usage surcharge for that establishment is same for debit cards as well as credit cards. If they are not, then what I do is I determine which one is better and then decide whether to use my debit card or use my credit card. Not just that, the credit card can also be used to buy gift cards which are discounted during the holiday season or across the year multiple times. So currently we have an offer going on at Kohl's for Flybuy members where you get 10% discount on many of their gift cards. These gift cards can be used at multiple establishments. So the current 10% discount on Ultimate Gift Card can really help me get an automatic 10% discount when I spend that money at top retailers like JB Hi-Fi, Harvey Norman, EB Games, etc. So using your credit card to buy these gift cards would automatically give you double benefit. One, a 10% discount on the gift card. Second, that money is going to stay in your account because you wouldn't be paying for discounted gift cards through your bank account, but through credit card. Just recently, I bought myself a Nintendo Switch 2. Yay. And I got it from JB Hi-Fi. Using the gift card I got through this ongoing offer. That was an automatic discount of 10% on that product. And then you can actually use these gift cards in multiple places, especially if you use them during sales. That's like double dipping on the discounts that you potentially have. The 10% that you got on the gift card itself, and then the ongoing sales that you have. So those were my 5 tricks that I use personally in order to save some money in this age of high cost of living. And now the special tool, the special website that I was talking about in the beginning. There is a website in Australia called OzBargains.com.au, link in description, in which people regularly share deals and discounts running across Australia. It is community driven, so it's usually quicker, and it's a repository of all the deals going on. So you won't have to go to each of these retailers' website to find out what's the new discount ongoing. So log on to this website and regularly check where and how you can save money. Hope you liked all the tricks that I just shared. Make sure to hit the subscribe button and like this video so that this video can reach more and more people and help others too. Do drop a comment if you would want me to expand on any of these ideas further or for more discussions on personal finance. Hope you liked this video and you would come back for the next one. Have a great day. Goodbye.